Today, the 11th of August 2026, the euro to pound sterling exchange rate is clinging near two-week lows, hovering just below 0.8550. But here's the striking fact: yesterday, on Monday, it briefly touched 0.8536, its weakest level in a fortnight. That may sound like a small move, but in the currency world, a break below a key psychological level often signals a fresh wave of selling pressure. The question is, why is the euro crumbling against the pound when many expected UK inflation to drag sterling lower? The answer lies in a combination of central bank divergence and technical breakdowns, and we're going to unpack it all right now. Let's rewind to the catalyst. The European Central Bank recently held interest rates steady, defying calls for a hike to shore up the euro's value. With no rate increase, the yield advantage that typically supports a currency evaporated, and traders rushed for the exits. At the same time, GBP is finding a floor despite the UK's own inflation headache, because the Bank of England has hinted it may need to act more aggressively later this year. That contrast, ECB inaction versus potential bow action, is the core driver pushing euro to pound sterling lower. On the technical side, the pair repeatedly failed to clear resistance near 0.8570 and 0.8600, which brought in algorithmic selling. So what does this mean for markets right now? For spot traders, each bounce towards 0.8550 is being treated as a selling opportunity. The daily range is compressing, and volatility metrics are spiking, which suggests a bigger breakout is brewing. Currency option traders are loading up on puts, betting on further declines. For businesses with euro-pound exposure, this shift is also sharp. A company converting euro revenues into pounds is getting fewer sterling pence today than just a week ago, squeezing margins. Even holidaymakers exchanging money are seeing worse rates for euros. The immediate impact is clear: bearish sentiment is now deeply embedded, and the question is no longer if we slide further, but how fast. Looking ahead, the path of least resistance remains to the downside. If the 0.8536 level breaks again, analysts see a swift test of 0.8500, the next big psychological support. Much depends on this week's economic data. Any sign that Eurozone growth is losing pace will amplify the sell-off. On the sterling side, UK inflation readings due later this week could either reinforce the bow's hawkish streak or cool it down. Should inflation surprise to the downside, cable might wobble, but euro to pound sterling could stage a temporary bounce. However, the technical damage means any rally is likely capped at 0.8570 by now, solid resistance that previously held firm. Here's the takeaway: euro to pound sterling is under heavy bearish pressure, driven by a clear policy gap between Frankfurt and London. The 0.8536 low is not just a number, it's a warning. The pair is consolidating below 0.8550, and the weight of selling interest suggests further declines are probable, not just possible. Keep an eye on 0.8500 as the next critical floor. For traders, the strategy remains to respect the trend until the ECB changes its tune. That's your analysis for today, the 11th of August 2026. If you found this valuable, please like and subscribe. We're here every day breaking down what moves the markets. See you in the next one.